Crypto is an interesting game of capital flows. There might be zero capital flowing into the crypto ecosystem, but simply because people are more risk off, simply because people are scared, prices even of Bitcoin can easily crash 50% and more. Check out this chart. This shows the major asset dominance in different colors, and it also shows the Bitcoin price in black. And have a look how between May of 2021 and January of 2023, the capital that's in crypto hasn't really changed much, but the price of Bitcoin went from almost 70k all the way down to 16k. And the only reason for that is that a lot of that capital moved from the risky assets. So we've got Bitcoin in orange, the altcoins in purple, and Ethereum in blue. The capital moved from those risky assets into stable coins. So that's at the bottom. That's the area in turquoise. And I believe a lot of this has to do with the illiquidity of crypto. Crypto isn't that liquid. The majority of Bitcoin hasn't moved for quite a while. And so a little bit of trading by a few short-term holders can move the prices massively. And so we've got two interesting effects here. The first effect is simply fiat getting converted into crypto and vice versa. The second effect is simply capital moving within crypto, and that can cause quite a lot of price movements. Now let's first look at the fiat to crypto conversions. This can be seen over here in this chart. This shows the stablecoin market cap of DAI, USDC, USDT, BUSD, etc. So the market cap of the major stablecoins, and that rises whenever people deposit fiat and convert this into stablecoins. And it falls whenever people redeem fiat after they've sold their crypto. And we have seen this going sideways from April to August of this year, but now it tends to rise again. And it tends to rise at a very similar pace to what we've already seen since October of last year. So we are expanding again. Fiat is flowing into crypto again. But let's have a look at that second effect, right? The effect that really matters. How much money is in the stablecoins versus the risk on assets. Check this out. This is the stablecoin dominance. So we're not looking at the stablecoin market cap. We're looking at that market cap relative to all of crypto. So how relevant are the stablecoins in the grand scheme of things? How much are people risk off? And so this is a percentage measure. We are currently at 0.76% of all of crypto being in stables. We peaked out on the 9th of November 2022 at roughly 19%. And so with this chart, we can again see how much impact this conversion of stablecoins to risk on assets actually has. Because let's take this data point when this peaked on the 9th of November of 2022. So when a lot of crypto money was simply just in stablecoins. That was also the time when Bitcoin bottomed at 16k. Afterwards, it recovered. In other words, there's an inverse correlation here, right? When the stablecoin dominance is going down, the Bitcoin price goes up and vice versa. And so in the future, the market might be heated again once we go to the 19% mark or so. But right now, we are still relatively low. So the market as a whole is quiet risk on. Here's another interesting chart. This shows how much impact Bitcoin has relative to Ethereum and altcoins and stablecoins. It shows the market realized value net capital change. So how much money is flowing into each asset? And we see that Bitcoin is really still ruling them all. And we see a very interesting peak around April of this year. Again, at the same time when the stablecoin market cap stopped growing. And so the selling from centralized exchanges is also slowing down. Again, it peaked when the Bitcoin price peaked. The selling pressure is subsiding, and that should be rather positive for crypto. This needs to go to 1 million, or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out. TheBitcoinTrader.com link is down below. Now, I think one of the strongest effects in crypto is our reference price. As in, when you buy into crypto, you're looking at how much am I currently in profit versus in losses. And when you're too much in profit, you might consider taking some of that profit. If you're too much in losses, you might consider not to sell at all if you're long-term bullish on the asset, because you're already down, you're simply just waiting for the recovery. So the reference price is very important. So what we can then do is we can look at the reference price of the entire market. What's the average cost basis of the market? Is the market in aggregate in profit or in losses? And there's different ways to look at this. Here we've got the long-term holder net realized profit and loss. And when the long-term holders take profit, that's when Bitcoin tends to peak. When the long-term holders panic sell, that's the time when to potentially buy. Currently, long-term holders aren't realizing that much profit anymore. But again, it doesn't look like we are dirt cheap either. Very similar to what we are seeing in the stablecoin market caps, right? We are not anywhere close to 18% or so in stablecoin dominance. Now, when it comes to assessing the long-term holder behavior, I tend to prefer another metric, and that's the value days destroyed. The value days destroyed looks at long-term holders. It weights a holder stronger the longer a Bitcoin has been held. It also weighs the holders more that simply own more Bitcoin. So the longer you have held Bitcoin and the more Bitcoin you have, when you then suddenly start moving your Bitcoin, that's when the value days destroyed metric goes up. So the whales that are diamond hands, when they turn into paper hands, that's when the value days destroyed metric is going up, and that's when I tend to sell as well. And that's this metric over here. It turned red very nicely just 1 or 2 days before the actual price peak. It's now coming back down again. The long-term diamond hand whales aren't really offloading, but they might once we see new all-time highs in Bitcoin again. There is profit taking by long-term holders, but when we look at the really dormant coins, they don't really move much. It seems like currently we are at the crossroads, because the current level in the long-term holder realized profit and loss ratio is very similar to where we had seen turnarounds in the past. We've seen a secondary rally at the end of 2021. We've also seen it at the end of 2013. And we also had a turnaround, but from the other direction in the middle of 2019. So are we bouncing again? Are we going to see a secondary rally? Or are we simply cutting through, extending the bear like we did in 2018? I don't have that answer. But I believe that in case we do see a secondary rally, it might look very similar to 2021. We are probably not going to go to 150 or 200K. Again, simply because a lot of stablecoin money has already been deployed. There is money flowing in, but a lot of people that are dealing with crypto are already quite heavily invested. There's not a lot of dry powder on the side. Now here's an interesting metric. It's a short-term holder relative unrealized loss. So how much are short-term holders in losses? And this tends to, of course, shoot up when the price goes down, but then it flattens out as people realize losses when the price simply goes sideways. Where then the short-term holders aren't in losses at all anymore, and they've capitulated like over here, right? We've seen a lot of negative price action, but no more unrealized losses by the short-term holders. That's when the trend might turn around. So having this very low is good. Having this rising is not necessarily good, but we are not really at elevated levels just yet. Instead of using the value days destroyed metric, we can also simply just look at how much the short-term holders had been destroyed. So how much realized plus unrealized losses had there been for the short-term holders. When this peaks, we tend to turn around in the macro trend. But of course, currently we are far away from such a peak. And so let's get back to the average cost basis. Currently, the average cost basis of a Bitcoin holder is at 31,420. So in aggregate, people are still in profit. If you're holding Bitcoin, you should be in profit. If you're in aggregate in losses with your Bitcoin holding, then you probably have too short of a time horizon. We can also try to time the tops with that metric. That's via the market value to realized value Z-score. So this now looks at the delta of the current price to the realized price in relationship to the volatility. So in relationship to the ups and downs of the market. It tends to peak in the red area. And of course, it tends to bottom whenever we are are below the realized price, this is when the market in aggregate is hyper depressed. This is when it makes sense to buy in very heavily. If things don't turn out bullish, we might see something very similar to the second half of 2019, where we came back all the way to the realized price to then actually see the proper bull run. Again, a drop to that realized price would bring us to 31,400. If it's your first time here, feel free to subscribe. I publish videos regularly. If you got something out of this video, feel free to also give this a like. It helps the channel grow. If you've got Telegram, feel free to join us. It's 100% free. The link is down below. Looking very much forward to chatting with you.